What is going on, guys? What is going on? This is your boy Andre with another session. So, in today's class, I'll be teaching you guys how to identify false trends now. So, false trends is a retail perspective that retail traders be looking for buying positions or selling positions when they see an uptrending channel or downtrending channel. As institutional wise, what institutions look for is to stop out all those retail traders and hit their stop losses. So, let's get to it. Before we get to it, if you want to learn more about this and be on my live sessions and take live trips with me, just click the links in the description and you'll be there and be joining my live sessions. So let's get started. So how to identify a false trend? So a false trend, like I said, it's a retail perspective mindset, right? So on a retail perspective mindset, when they're looking for buying positions, let's say we have an uptrend structure, right? So let's create an uptrend structure here so you guys can see what I'm talking about. So false trend perspective, we are going to have a uptrend going, forming higher highs, forming higher lows. So right here we have the higher high, higher low, higher high, higher low, and so on. So on a retail perspective, they're going to start drawing their trend line here, and they're going to be looking to get in for what is buying positions, right? So they get in for buying positions where? And their higher lows. So they're going to get in for a buy position here. They're going to get in for a buy position right here, second tap, and they're going to get for a buy position right here on the third tap. So every time that we see 3 taps, that's when we start identifying a false trend. So we have what is the first tap, second tap, and third tap. Retail traders getting for buying positions here, getting for buying positions here, and getting in for buying positions in this area. So once we see the third tap, all we wait for is for market to shoot to the upside to do what? To clear out what is an old high. Once we clear out this old high, market is going to keep on rising to the upside, create a new high, but this high it's going to come up and meet within the accumulation of price candle. So now an accumulation of price candle, that'll be going over a different session. So you guys to know what an accumulation of price candle is more in depth. Today we're just going to be focusing on false trend formations. So after we see market rising to the upside and clearing out this old high, meeting with an accumulation of price candle to this new high, market's going to start rallying to the downside. So this is where the banks are going to start getting for sales before the buy to clear out all the stops. What I mean to clear out all the stops, they're going to look to seek for liquidity around on the second tap and the third tap of the false trend going to the upside. So what I mean by seeking liquidity? So liquidity is an area where retail traders are now starting to move their stop losses. Why? Because they had already gotten in for buy here and buy here, and they already been running in profits this up rally and this up rally right here. So what banks are going to look for is to keep on shooting down to clear out all the stops, all that liquidity that we have on equal lows, or all the liquidity that we have on just accumulation and distribution phases, where we only have stop losses. And once those stop losses are cleared out, well, market is going to spike to the upside with a bigger push. So then start rallying to the upside to do what? To then find its new highs and clear out equal highs and stop losses that we have and liquidity around this area. So that will go over right now once we see a real life market trend, which is actually an example that I took from a trade I had taken on EuroGBP. Right here, this is a trade I took regardless of the false trend formation. So we just zoom out a bit, looking at the forward time frame. Right here, we see the uptrending structure. So we see this uptrending structure going to the upside. Right here, we see our first tap from the trend, future perspective, second tap, and we see our third tap, which is right here, right where we have all the liquidity. So liquidity we have right here from all its equal lows, and liquidity we have right here as well from all its equal lows where people got in for buying positions. So the liquidity is where we have all the wicks where new stop losses are from those buying position areas. So what I was waiting for when I saw this formation, I was waiting for market. I saw around this area. So around this area, I knew that created the third tap of the false trend. So was I going to get in for a buy? No, I'm not going to get in for a buy. I was just going to wait that out. I was going to wait that move to happen, go to the upside, create that new high right there. And we go over here on the 4-hour, we can see that that's the tap of our accumulation of price candle, which is right there, which is this last candle, this last bull candle before the push down. So this right here is an accumulation of price candle. I'll go over that more in a different video. So just focus on this right now. So what I was waiting for was to market rally to the downside to come and clear out what is my lows right here from the third tap, which it did. It wiped down those lows. I still was waiting a bit more for the move. Market kept going down to then do what? wipe out my second lows, which it is where I have all my liquidity on the second tap of the false trend. Once I saw that, market here tested with an accumulation of price candle. It already cleared our equal lows here, there's stop losses, and now clear our stop losses that we have here. So since there's no more stop losses to be cleared out from retail traders, market is just going to rally with a big push to the upside, which is where the institutional banks are starting to get in for buying positions because there's no more retail trades in the market. And this is where I got in for a buy position. I was only risking 20 pips. Two of our gain a total of 223 pips. So far, I already secured profits in this area, which was around 130 pips. I already secured profits in just 3 days. I made 130 pips. So I hold that trade for 3 days. I still have it running to keep going to the upside and clear out my high that I have right here. So we have to clear out this high that we have right here in this area. So market still has more to move to the upside. I already secured partials, just waiting for it to hit my last take profit. So that's what I was waiting for there. And that's all I got in for this buy position because I was testing also in my accumulation of price candle here. So I got right in that test. I calculated my stop loss. Well, my stop loss only did it like 10 to 15 pips plus for my accumulation. So like stop loss like right there, 5-6 pips more, which is pretty tight stop. Good risk to reward ratio, risking 20 pips again, 223. So that's what I was waiting for on this move, and that's what I got on this trade. So that's how you identify a false trend. That's one of the examples I took from one of the trades I took. Zero drawdown, 0 to none drawdown, at least like 1 pip drawdown max. But market just rallied to the upside because we have the pressure of buyers. With the pressure of buyers, are the institutional banks getting in for big moves, and because they move the market with big lot sizes, so they're the market makers, right? So that's what we were waiting for right there. To just rally to the upside. So let's go ahead and look for another example. Let's see if we find another good example of a false trend. So okay, let's zoom out. Let's see EuroCAD. Let's see if we find a nice example. Looking here, going to the downside instead of to the upside now. So you guys can see how market reacts with false trend formations. So let's see. Let's look for a good pair. Trying to find a good pair that has a nice false trend going on. So right here on GPUSD, we can see a trend coming down, which is right here is a false trend with a retail perspective market as well. So let's just go ahead and mark this trend, and let's go ahead and break it down together. So right here we have first, second, and third tap. So retail traders getting in for selling positions here. Retail traders getting in for selling positions here. And retail traders getting for selling positions here. So since we have the sales here, they're already in profits there. They're already running profits here. So what's retail traders going to do? They're going to move their stop losses to break even. So they're going to move their stop loss from their second tap right here, which that is where we have stop losses. And we have stop losses right here, which is where we have all the liquidity. So the liquidity you might not see on the 4 hour, but it's much better to see on the 1 hour. We'll go to the 1 hour right now so you guys can see the liquidity that we're talking about. We're going to the 1 hour. Let's just go back over here. So right here we have a lot of liquidity, equal highs to be cleared out. And over here we have more equal highs to be cleared out, which is the liquidity right there, where we have the stop losses. So just go back to the 4 hour now. We could break this down. So what I mentioned that we wait for to get in for a trade on this. So in this case, we see a false trend coming downside. So we're going to be waiting for buying positions. Once we see the third tap, what is the market going to do? It's going to come to clear out the old low. So it'll come to call this old low. And once that old low is cleared out, market's going to keep coming down until it looks for an accumulation of price candle. That we have our accumulation of price candle right here, which is this last bearish candle right there before the spike to the upside. So market test is right there. And this is where we exactly want to get in for that buying position to seek out all the liquidity that we have here and here. So our first take profit, say, but we would have got in on this trade. My entry point for a long position, right there. So my entry point would have been right there, where we tested that accumulation price candle. My stop loss, I put it just like 10 to 15 pips below the accumulation. So just adding 10 to 15. So like right there, that would be a good stop. 17 pips plus. So it would have been like right there, my stop loss. Been risking 44 pips to have first take profit, which is right here on this third tap of the false trend. First TP of 262 pips. which is smash that take profit, currently smashed it. And our last take profit would have been on the second tap of the false trend, which is up here, which overall would have been risking 44 pips to gain a total of 397. Market, what happened, came and tapped right there, just perfectly hit, take profit at 397 pips. And our drawdown would have been just like 5 pips max. As you can see, there was no drawdown at all on that entry. So that's how you find false trends. That'll be all for today's class, which is how to identify false trends. Hope you guys liked it. And if you guys want to learn more and jump on my live sessions, just click the link below on the description, and you guys will learn and jump on my live sessions as well and take live trades with me. I'll see you guys in the next video.